The failure of Silicon Valley Bank last week has triggered a period of unparalleled bank volatility not witnessed since the 2008 global financial crisis, GFC. While most people had a terrible year in 2020, the IT industry had a wonderful year. Consumers were spending more time on their phones and computers, conferencing software was becoming more popular, and fresh money and a hiring frenzy made the industry livelier than nearly any other section of the economy. Silicon Valley Bank, SVB, one of the technology sector's biggest banks, with $60 billion in client deposits in the first quarter of 2020 and expects to have $200 billion by the first quarter of 2022. The happy days will not endure. At Finance Doc, we will be sharing more explanation videos related to cryptocurrencies, trading, forex, and many more. While you are already here, don't forget to hit the subscribe button and click on the bell icon to get notifications for our future videos. So, let's begin the video. Silicon Valley Bank is the largest failure of a bank since 2008. The bank made investments in government bonds and mortgage-backed securities, but incurred significant losses when the Federal Reserve hiked interest rates to battle increasing inflation. Silicon Valley Bank liquidated assets in order to reduce losses. Clients withdrew $42 billion in deposits when it indicated it needed to raise $2.25 billion in capital. The bank was closed down the next day by regulators. It is the greatest bank collapse in the United States since the 2008 financial crisis. Nevertheless, the U.S. government said on Sunday that depositors will be allowed to access their funds beginning Monday. All depositors would be totally insured, alleviating concerns of a larger disaster. The U.S. Treasury, the Federal Reserve, and the Federal Deposit Insurance Corporation, FDIC, have all maintained that taxpayers will face no losses as a result of the scandal. Meanwhile, a group of investors led by the Bank of London has made a formal proposal to the UK government for SVB's UK business. The British government has been working on a strategy to assist UK IT businesses harmed by SVB's demise. While Silicon Valley Bank was not as heavily invested in cryptocurrency as Silverware, it has already generated ripples throughout the sector. USDC depegged following Silicon Valley Bank collapse. On CoinMarketCap, the stablecoin USD coin, USDC, fell to a low of $0.879. Circle, the business behind USDC, has $3.3 billion in SVB exposure, raising fears among investors that the stablecoin may lose its anchor to the US dollar. Notwithstanding the fact that the $3.3 billion represents just $40 billion of total USDC reserves. Upon the Silicon Valley Bank closing news, stablecoin USDC falls to a low of $0.879. Silicon Valley Bank has recently experienced a typical bank run, similar to those seen during the 2008 financial crisis, the business claimed in a blog post on Saturday. $3.3 billion of USDC's cash reserves remain with SVB. We had begun transferring these money to other banking partners as of Thursday. Despite these transfers had not yet been completed as of Friday's close of business, we remain confident in the FDIC's handling of the SVB situation and are prepared to receive these funds. Why does a bank failure affect a stablecoin's peg? Since the USDC is totally reserve-backed. That is, each USDC is backed by actual cash and short-term US Treasury bills. If even a portion of that reserve disappears or goes missing, the market will lose faith. Investors will be concerned about the stablecoin's ability to maintain its value. Then there's Silvergate, whose demise occurred only days before the SVB upheaval. Crypto-friendly banks had a nightmare week. The bank, which had high-profile clients including Coinbase, Gemini, Paxos, and Circle, blamed its problems on the collapse of Sam Bankman-Fried's exchange business. The bank's stock fell 20% when the Justice Department began an investigation into its participation in FTX's demise. Silvergate's demise has left a void in the cryptocurrency business in the United States, with several crypto exchanges failing to transfer cash into trading accounts and off-ramp them into bank accounts. Coinbase, Crypto.com, and Paxos all promptly distanced themselves from the bank. Regulators are likely to be more scrutinized as a result of Silvergate's collapse. There is rising worry about the industry's influence on conventional finance. As the fallout from FTX continues to spread, we are seeing what can happen when a bank becomes overly reliant on a hazardous, unpredictable industry like cryptocurrency, said Sherrod Brown, a progressive U.S. Senator and chair of the Senate Banking, Housing, and Urban Affairs Committee. I've been concerned that when banks become engaged with crypto, it spreads risk across the financial system, and taxpayers and consumers would bear the brunt of the cost. Following the voluntary dissolution of Silvergate, Blockchain Enterprises went to Signature Bank, one of the country's last banks to provide financial services to the risky sector. But, 2 days after the Silicon Valley Bank failed, the New York Department of Financial Services took over Signature Bank, which had $88.59 billion in deposits. The statement provides instant reassurance to crypto firms who have partnered with Signature that their deposits would be secured. But, it leaves the question of where people will get financial services unanswered. What about the bankless future? So, what happened to the financial tech nirvana that cryptocurrency promised? Why has the failure of 2 banks pushed cryptocurrency markets into a tailspin? Wasn't cryptocurrency intended to be a replacement for the existing banking system? It was, and it still is. It depends on who you ask. Yet, the harsh reality is that crypto still operates in a larger financial system, which includes regular institutions. Even if your crypto ideals dictate that you avoid working with banks as much as possible, the individuals who invest in your firm, trade your token, and collaborate with you will have other notions. Last week, many people's dreams of a bankless future became a reality. Yet, not in the way that they expected. Of course, traditional retail banking will be required until cryptocurrencies can be used to pay for more products and services. Sadly for crypto maximalists, traditional-style banks are the axles that turn the financial system's wheel. As they fall, crypto is obviously impacted. DeFi is also not yet developed enough to completely replace banks. The overall market capitalization of DeFi is less than $50 billion. In the conventional financial business, trillions of dollars are measured. Until that reality changes, the crypto sector must recognize the significance of these financial behemoths. We would love to hear your opinion on the bankless future that crypto had promised and whether we are walking on the right path. Share your thoughts in the comment section below. Also, if you have any feedback, don't forget to share that as well. See you in the next video. Until then, take care and keep investing in crypto.
Thank you for watching this video. If you like this video, don't forget to hit the like button and subscribe to the channel so that you don't miss out on our upcoming videos.